All right, now let's head on to our first conversation. Yes, a lot of data coming out from the U.S. Yes, we've had CPI, we've had PPI, and we're also following what's playing out in China with the visit there with Trump and some of the biggest names in tech and the industrial development in the U.S. So we're going to be following all of that now. And joining me, we have Mr. Bismarck Rewane, CEO of Financial Derivatives Company, right here in the studio. It's great to have you, sir. Good morning.
Yeah, good morning, Daddy.
Another day, another dollar, another naira.
Interesting times.
Interesting times. And definitely we've been following all the data coming out from the U.S.
Yeah.
CPI data, we had that earlier. Now we have PPI.
Yeah.
You know, we track the consumer price index. We also track the producers
price index
at this point, and both of them are rising.
Yeah.
And I guess we know why.
Yeah, we know why. But the interesting thing is that the PPI precedes the CPI in terms of its trend. You are seeing the PPI at 6% all the way from 4.4. That is huge. Why? Because of the price of diesel and the transportation cost. That is going to feed in, so you can expect that in next month you will see the CPI go above 3.8, maybe to maybe 4 or something like that. That's unprecedented in the last 4 or 5 years. So something has to be done. It's not, coincidentally, tomorrow is the day when Kevin Warsh takes over.
Yeah.
Right? So
I have to get used to not talking about Jerome Powell after this.
I know. But Jerome Powell remains on the board, mind you.
Yeah, he remains on the board.
And he has a vote.
Right.
So really, what we're going to be seeing is that Kevin Warsh takes office tomorrow. And who is Kevin Warsh? That's the first question we're going to ask. Kevin Warsh is a Stanford, Harvard-trained economist. He has his own views. He says he's not a puppet of the executive. So sweetness is in the pudding. Sweetness of the eating is in the pudding. So sweetness of the pudding is in the eating restaurant.
Right.
Now, what do we expect to happen? One, he's married to the Lauder, the heiress to the Lauder empire, the Estee Lauder, who own Origins, Avida, and all the others. So he has about approximately $100 to $200 million in private wealth, which he's going to put in a blind trust, so he's not going to be compromised. But the truth is that, based on what I see and based on what the data tells me, it will be almost impossible to bring down rates before the end of this year. If the rates don't come down soon, I think President Trump is going to be extremely worried, because we have the midterm elections coming up 6 months from now in November, and the mortgage rates, which affects every American consumer's disposable income. If they stay higher where they are, and they are now, in fact, yesterday, U.S. 10-year bonds were trading as high as 5%. So it means that your mortgage rates are up, your credit card costs are up, and the price of gasoline is up. Those are not good things when you have an election coming. So something has to happen very quickly. Right.
And thinking that, President Trump, he was on Jerome Powell's case.
Yeah.
He kept on attacking him, saying it's time to cut rates. Yeah. You're being too slow with cutting rates. Then he starts a war with Iran, which takes up energy prices. Then now he's getting his man in, Kevin Warsh, as Fed chair. But he's making his job harder.
Yeah.
That even if he wants him to cut rates.
The reality is that, like I say, you never know what's going to happen. Be careful what you wish for, because you may just have it. The war in Iran is not the same thing as the war in Venezuela. The Iranians are emotional, while probably the Venezuelans are rational. So we expect to see that this price of crude, based on what's happened in the Strait of Hormuz, is going to stay elevated for some time. So I don't think it will be, you were talking about 105, and I think that, generally speaking, maybe we flat out at about 90. But for us in Nigeria, $90 per barrel price of oil is infinitely, so over 40 or 50% higher than the $60 that we're projecting earlier. So if you have $40 increase as a percentage of a $60 projection earlier on, you're doing, Nigeria theoretically should be doing very, very well. the oil windfall should begin to flow in. And remember, Nigeria announced yesterday that it has an increase in the production, including condensates, but we have to
That's
take
1.66 million barrels per day, including condensate.
Condensate, but if you take 200,000 barrels as condensate, so we are back to a 1.4 something. Depending on how much forward sales we made, right? That should give us a good windfall, right? A good windfall for the government. But the price of petrol, the price of diesel, price of aviation fuel is a big hit on the Nigerian consumers' pocket. So the consumers continue to cry, the government continues to smile, and then we have to align in some way. I think sooner or later, the government will have to translate part of this oil windfall, if properly managed, into a consumer palliative or some kind of support. Because you can't have a tale of two cities where everything is going well.
Almost like a bifurcation at this point.
Yeah, the government is making money and the people are losing money.
Right. That's not a good side.
No, but it will get better.
It should balance up at some point.
There are lags between when you have policies and when you get the effect. The lags have been longer this time, but I'm sure, from what I hear and talking to people in government, there is a sense of urgency now to do something so that the guys, the people on the street, the widows and orphans don't suffer that much.
Yeah, because I was speaking to a consumer sector analyst the other day, and he said at this point, the consumer is pushed to the wall.
Yeah.
That's a Nigerian consumer.
Yes.
And there's no wiggle room.
It's down and out, right? So, but you have to, the fact that you're down and out doesn't mean that there's no recovery path. There's a recovery path, and that path has to be, intentional, and the government has to do something about it. It's not about sound bites and PR. It's about reality. It's about reality. And so we think that it's got the attention of everybody in government, from the president down to the finance minister, central bank, and everybody. They are aware. And believe me, I think they must be working diligently to push, to make sure that people's suffering is reduced.
Right, that'll be great to see, at this point. But Mr. Rewane, we're going into a new week.
Yeah.
That'll be next week. What are you seeing at this point? President Trump in China, he took all the top tech CEOs, the industrialists, Boeing, they're all there, with him. What are you expecting from this trip?
Well, two things. One is he has to assure China that the U.S. is not going to increase its spending on defense for Taiwan, because China is very sensitive about that. Secondly, there has to be trade cooperation. Don't forget, you are talking about the two largest economies in the world. Added together, you're having almost 40% of the global GDP in the hands of these countries. America has about almost 25 to 27% of GDP, global GDP. Chinese have about 17%. The Chinese are growing at about almost 5%. So the Chinese have it, very clearly. They have a clear strategy, and you can see it in technology. You can see it in Huawei. You can see it in 5G. You can see it in even the intellectual property. You can see that their currency has maintained some stability. 7, 8 years ago, it was China being blamed for COVID, right? But that's a long time ago. Now the Chinese have a clear strategy in Africa, clear strategy in Europe, and the Strait of Hormuz is where they get most of their oil from. They're prepared for it. And so I think the Chinese are very, very, very deliberate. And so it looks like the U.S. is having to actually concede a lot to China. And
President Trump will make it look like he's conceding.
No, but I think he's already, the comments he made this morning were very flattery. But the Chinese
don't have nice words to say.
Yeah, very nice words, but the Chinese don't care about that. The Chinese civilization is 3,000 years old, not more. So the term of an American president is at best 8 years, and now we have about 2 more years. So they can wait. They have the resources, they have the manpower, they have everything, and they're buying what are they going to do? They're going to buy more Boeing parts. They're going to buy some defense equipment. And they're going to be selling some rare earth to the U.S. And you forget something. The Chinese have almost $4 trillion of reserves, external reserves, in U.S. securities. If they decide at any point in time to start selling U.S. securities, you know what's going to happen to the global market. So they know they've come a long way, and their bargaining power is infinitely stronger today than it was maybe 5-10 years ago.
All right. I guess it'll be interesting to see how the markets react.
When we talk about commodities, I think
going into next week, we'll see how that
we should talk
plays
about
out.
a little bit about commodities just for a minute or two.
Right.
We've seen commodity prices begin to flatline, and then slightly higher. But of all of this, what was most interesting to us was the price of flour, which you use to make bread and so. That has come down sharply. It's about a year ago, it was about 65,000 for a bag. It's now 53,000 naira a bag. Theoretically and practically, it means that the price of a loaf of bread, which is 1,400 for the agege bread or whatever you call it, I understand it came down to 1,000. It's now at about 1,002. So why? And why is the lower flour price and not reflecting correspondingly in the price of bread? It's come down, price of bread at 1,200, 1,000 naira for a loaf is much better than 1,400. But technically speaking, it should be at about 1,900 naira.
Sub 1,000 for a loaf of bread.
But the thing is that the big elephant in the room is the price of diesel.
Right.
Because the furnaces, the bakeries, right, run on diesel. So the price of sugar is down, the price of margarine is flat, the price of baking powder is down, right, and the price of flour is down. But the cost of transporting the flour after milling to the market has increased. So people are shifting from eating bread to eating substitutes, yam and all sorts of things. So we are seeing this play out. What we're looking out for is what's going to happen to the price of flour in the next 2 weeks, because you find that rice is now at 60,000, I think it went up. And so if the price of flour comes down, it drags down with it all other substitutes like yam, cassava, gari, and all of that. And so that could be a good sign for food inflation coming up in the next 2 or 3 weeks.
Yeah, we'll get that, very soon, and for the next, that's for this month.
Yes, but you have your MPC meeting next week, and again.
So much to look out for, and I guess it's a trifecta at this point.
Yes.
All right, thank you so much, Mr. Bismarck Rewane. Always great having this conversation with you, and definitely we'll keep tracking all these latest developments and see how it plays out into the markets.
Thank you for having me.
Thank you, sir. All right, we'll take a break now. When we come back, we'll talk about Nigeria's hospitality and tourism industry. That's in a moment. Do stay with us.